Welcome back. It's Business Morning on Channels Television. Don't forget to be part of today's conversation. Join the discussion on all our Twitter handles at This Morning, at Channels TV, or at Harriet Agbe. Or better still, send us an email. Send it to businessmorning@channelstv.com. Now, investment banking is central to growth and development of new economic frontiers and can play a big role in deepening the economy by assisting businesses, governments, and even individuals create innovative ideas and implement them. Now, with the change of guards at the federal and state levels on May 29th, decisive policies and actions for reviving key infrastructure is expected. Ike Chuoke, the head of investment bank and fund management firm called Afrinvest, joins me now in the studios. Good morning, Mr. Chuoke, and thank you so much for joining us on the program.
Good morning, Harriet. Pleasure to be here.
Glad to have you. Now, we're talking about change of guards.
Yeah.
And we're looking at one of those key issues, which is finance and infrastructure. But let's take it from the top. What are the roles of investment banking in infrastructure financing in Nigeria now, for instance?
Well, essentially, investment banks play a role as facilitating the intermediation of capital. Yeah. So in a situation where there's a promoter, such as the federal government, wishing to execute large-scale infrastructure projects, then an investment banking firm is well suited to enable them arrange holders of that capital to come in and understand the nature of the project and bring the needed combinations of equity and debt to enable that project get off the ground. So investment bankers do play a very critical role in that aspect.
Now, looking at the policy the way it is,
Correct.
We have a lot of issues with regards financing key infrastructure projects. Just yesterday, I was having a conversation with the DG of the LCCI. We're talking about the private sector agenda. And he mentioned that one of the key issues they have is moving their products from state to state.
Correct.
So every time it seems that we're belaboring the road issue, what about the rail issue? Why don't we have infrastructure financing, for instance, for rail projects?
Well, that's interesting. I think a lot of noise has been spoken by this government and the President Jonathan government, and perhaps a new one about infrastructure, particularly in the power sector. But for manufacturers, for a lot of industrial businesses, actually the transportation sector that is critical. If you had an effective rail network around the country, it will reduce by a large factor the cost of logistics, of moving heavy industry, heavy machinery, goods and services around the country. So indeed, the rail net system is one that is begging for support in terms of how to organize them, how to bring needed finance into that. But I think the starting point should come with creating the enabling environment. I don't think that we have tackled the issue as to who owns the rights to operate the railway system. I think so long as it's still owned by the Nigerian Rail Corporation, and you don't have sort of a reformed railway sector, such as what you have in the aviation sector, it will be very difficult for private sector investors to come into that. So you need to first look at the enabling law and understand how it works, and then see how to kind of break the law to enable private sector to come in. For instance, you need to have someone build the railway lines across the nation, and then maybe somebody else, some other people can then provide the rolling stock, which will be the trains or the carriages that convey the goods and passengers across the system. So it's quite a complex bit of work to be done.
Yes, it is. And wouldn't it make it kind of a little difficult to monitor all the parties concerned? Because I guess that's one of the reasons why the federal government has continuously held on to that particular sector. That's the rail, improving the rail transport.
Well, I think one thing that will be clear to this government, and it wasn't well understood, I think, by the Jonathan administration, that they will never have enough money available in Nigeria to actually do all the things that need to be done for the Nigerian economy. What the government needs to think of doing more quickly is to create an enabling environment to attract the needed capital. So I don't say that you shouldn't tackle the railway issues because of complexity. In fact, the power sector reform is perhaps even more complex, when you go from creating the system that allows generating companies to run, distribution companies to run, a transmission company, and all the other little bits in between, plus gas supply, and then down to the final consumer with transformers outside their homes. and then, of course, the metering systems required to make that all together. That's perhaps even more complex than the railway network. But, there are countries that have privatized railway systems. The United Kingdom is an example, and they provide ready benchmarks that one can copy and see how to improve upon. I wouldn't say you simply copy it verbatim, but see how to make it work for Nigeria.
Yeah, because you see, their environment is kind of different from our own environment.
Absolutely. In our own environment, we are begging for a lot of new investment. So we may not be as draconian in the conditions we put on investors, because we actually need them to come in and build the railway tracks for us. There are many parts of Nigeria that are begging for connection. I mean, Lagos to Abuja, if you had a high-speed rail network there, it would probably be a 4 to 4 hour door-to-door trip. That was probably probably more efficient than you to go into the airport and fly in and coming back into the city center from Abuja airport. So those are important things, particularly because railways are actually more efficient for carrying goods at night when most of the passengers are sleeping. So it allows you to move heavy goods, heavy machinery from one part of the country to the other, particularly from the ports to the hinterland in the north.
From all of this, it just seems as if Nigeria hasn't really tapped the potential of investment banking in this regard.
Not really, and sometimes there's also a view amongst a lot of government administrators that anything concerning investment banking they have to go abroad to get. And you find quite a number of government agencies are all too quick to go and hire the JP Morgans and the Goldman Sachs of the world, rather than talk first to their local investment banks, who actually understand the issues from a local perspective and from a practitioner perspective, and also understand the applicable laws that need to be met. Certainly, there's always a space for the global banks to join in, but the best idea will really be to see a partnership between the local advisors here, who understand all the local issues, and the international advisors who can bring some of the benchmarks of how it's been done in different parts of the world and together and fine-tune something that will work best for Nigeria.
Why do they always feel that it's best for them to go outside first and looking at the homegrown choice? For instance, AfriInvest, I know, for instance, has been very instrumental in a couple of mergers and acquisitions that have come up, whether with local firms or even international firms.
Correct.
And just like your company, some others have also successfully ensured that M&As have been successfully done. But why does the track record not speak for the local investment houses, for instance, so that the federal government and even private individuals, private companies here in Nigeria feel more confident to step up to the bar, to step up to such companies and say, hey, handle my business for me?
Well, part of it is perhaps the knowledge base of some of these administrators. I wouldn't say it's all of them. There are quite a number of government agencies that have a deliberate strategy and a policy to insist that there must be a local advisor in any transaction they're doing. So the local advisor can apply directly on its own, or it's welcome to come with an international partner. But on the flip side, there are other government agencies, I don't need to name names, that would only put in RFPs, requests for proposals, that only international investment banks can meet. When they put the conditions so high, you look at the advertisement, and it simply means that you're not being invited into this transaction. You're not welcome to this party. I think that should change, and that's one of the things this government should really try to change, because there's a huge amount of talent in Nigeria, and if you actually don't use them, you don't really get close to what the real problems are.
But do these investment bankers, for instance, put themselves out to say we have the capacity to carry through with these transactions?
Yeah, we do. We do that. When there's organization, the Association of Issuing Houses of Nigeria, there's the SEC, there's a regulator, there's the stock exchange. I mean, the same government agency has the SEC as an agency of the Federal Ministry of Finance. With the phone call, they can find out in an instant what they need to know. But if some people deliberately don't want to do that, then clearly they may have other motivations. So it's not for lack of information. And clearly, the machinery of the federal government, and indeed many state governments, is sufficient for them to be able to ask enough intelligent questions. You don't really go and read one newspaper and say, that's it. I saw Morgan Stanley on this deal, so we're going to invite Morgan Stanley to some small town in the middle of Nigeria to do a transaction for us. And oftentimes what happens is that some of these international firms cannot even do the transaction. They have issues like KYC. Your customer, they would need to have even the state government or some of the government agencies be appropriately onboarded. Onboarded means being admitted as a client in their system. And some of their requirements may be too difficult. So it's even easier when they're already trading or are doing transactions with local investment banks who can say, yes, this is my client. I've actually issued a bond deal for them severally in the last few years, and I can vouch for them. In that case, it is an appropriate transaction that we can work on together.
Now, despite the seeming, setbacks that you've mentioned and the rest of it, how has investment banking market, for instance, now supported the funding gap for key infrastructure?
I think there's a naivety amongst Nigerian promoters to think that, anytime I need funding, I should rush to the commercial banks because they see, large amounts of capital in terms of shareholders' funds, the amount of profits they're declaring. And of course, they all run to the First Banks and Zenith Banks and GT Banks of the world, forgetting that most commercial banks will gladly lend you as much money as you want if you can give them all the collateral they need. And the collateral can be quite onerous. So we'll go back to, you mortgaging everything you've ever owned, including what your children might own in the next 50 years. Now, if you brought an investment banker into the transaction, you can see that very quickly that some projects can self-finance themselves, basically from the cash flow. There are investors that may say, for instance, Harriet, I don't want to invest in your business as a shareholder, but I think you have a business that is significantly cash flowing, that I'm willing to share part of the profit coming out of the business and leave you to own all of it. But we'll have a structure put in place where I bring in enough money, you agree that the income will be domiciled in a specific account so we can all monitor the cash. And when the cash comes out, I take my share, you keep the rest. And also you keep the company. And these are structures that many promoters could have used, for instance, in trying to buy some of the power sector assets that have been privatized in the last few years, the old PACN assets, the recent NIPP assets. But all too quickly, many of them went off and, gave their properties, their businesses as collateral. And, these assets are priced in dollars. These assets had, spurious cash flow projections built into it. And lo and behold, they've all acquired it. And suddenly, the cash coming out of the business is significantly less than it was. The commercial banks don't really care too much about whether there's enough cash or not. All they know is that they're holding your collateral. And suddenly, they're holding on to your other businesses. And, if circumstances are difficult, nobody really understands how to fix the problem. And that's why investment banks can play a very critical role in resolving some of these financing issues. What we are facing at AfroInvest is essentially people coming to us after they have...
I was just going to ask.
Yes.
After they've gotten your fingers burned, you now
Absolutely.
turn around and look for the nearest investment banker. Hey, come and give me advice, because the banks seem to be stifling me. In fact, I've gone so totally under, I don't even know if I'm going to be able to bottom out.
Absolutely. That tends to be like, and I'm saying, sir, how did you get into this mess in the first place? And look at some of the things you've already signed on to. You've signed on to conditionalities that I would have told you to just shred, if I knew about it. But, once you've entered a legal agreement, it's difficult to unwind it. So we then have to then come up with various restructuring solutions. We are working perhaps on 3 or 4 big restructuring transactions, all in the excess of, $250 million each, trying to unwind some of the, excesses that, various promoters have gotten into all too quickly, where a project finance solution could have been the appropriate one to take. And you'd have found investors who are willing to support you on that perspective.
Now, taking a look at where we're coming from and where we're going to, we have a new political administration taking office from May the 29th.
Yes.
And you're talking about restructuring. How quickly can the economy, or can key sectors of the economy be restructured, bearing in mind that we need more than ever before an investment banker to help us restructure this entity called Nigeria Enterprises?
Nigeria Enterprises is a very complex one. I think an investment banking firm or even the whole industry will not be enough to restructure it. But there are some quick wins that the new government can look at. And they probably need not just investment bankers, but accountants and lawyers. The first area to think about is to follow the money. Okay, yes, our income has gone down. We used to sell oil at $100 a barrel. Now it's averaging $50, $60 a barrel. So where is the money? The fact of Nigeria is that if you actually look through the system, you find we're spending 70-75% of our money on recurrent expenditure. What that actually means is that all our income goes to recurrent expenditure. When we want to do capital projects like infrastructure, we then have to go and borrow it from banks or international finance markets. But when you actually look at the detail of what's happening in the recurrent expenditure, it's not all very clear. It's extremely opaque, and the government needs to be honest with itself and say, we're going to try and diligence and create transparency in the system that allows us to know what we pay down to the individual that is collecting a salary from the federal government or to the state government. And if you actually audit it, I bet you could probably find 25%, perhaps as much as 40% of money floating around that has been hidden by our creative civil servants with all sorts of headlines and captions. Well, and that's following the money.
Mr. Chair, we're still going to come back and continue to follow the money, but just hold on to your thoughts. You're watching this morning. The conversation with Ike Chioke of AfriInvest continues after this break. Please stay with us.